Good afternoon and good morning, everyone. Thanks for joining us today. This is the first live webinar as part of our crop insurance series. Today we have Dakota Moore from the Kentucky Horticulture Council with us, and we also have Jeremy Hinton with Hinton's Orchard and Market in Hodgenville. So want to just thank our funders real quickly. The Southern Extension Risk Management Education Center provided a grant to do this educational series, and it's funded through the USDA National Institute of Food and Agriculture, also known as NIFA. So I'm going to turn this over to Dakota and Jeremy, and thank you so much for joining us today.
Thanks, Cindy. We want to thank Jeremy for being here with us. And Jeremy, you have some experience selling crop insurance, working with growers.
I do. Yeah, I've been doing crop insurance for about 20 years actually. So working with a variety of crops.
Sure. And you have some experience participating in some of the crop disaster assistance programs, correct? With your own orchard?
Yes. So we have a orchard and farm market here in LaRue County, and grow a variety of different crops, fruit and vegetable both, and have used the NAP program for peaches and a few other crops through the years, and have at this point have not used any of the multi-peril or whole farm for our own operation, and it's something that we look at and talk about, but at this point it's not something that we have used, which I realize is not great advertising for an insurance agent that's not using the product. But I do think that there's some good products out there that have their fit, and we'll talk a little more about those as we go through today.
Sure, that's great. First, I want to ask, when is the best time for a grower to contact a crop insurance agent?
I'd suggest that the sooner the better probably is the short answer for that. Every policy has a specific, what we refer to as sales closing date. And those vary by crop and can even vary by county. For the most part, the same crop will have the same sales closing date throughout a state, but there are actually, even in Kentucky, some differences. Some of the spring planted crops in Western Kentucky will have a February 28th sales closing date, and some will have a March 15th sales closing date. So it's important that you're staying ahead of those dates for sure. But really, the sooner you can talk with an agent and kind of get that breakdown of, these are the things that I need, and kind of get your homework done ahead of time, and then it just makes it a lot easier. And then the other thing that happens, for my agency, there's always this tremendous push at the end because everyone waits until the day before the deadline to try to do things, and it's just not possible as an agent for me to see and talk to everybody about the decisions that they need to make, in the last 2 days before a deadline. So I'd encourage anybody that, especially for the first time, and especially if we're talking about the whole farm policy, which I think was one we're going to talk about a good bit today, that you get started sooner rather than later with it, because there is a good bit of information to collect in setting up that initial policy for the first time. And so a brand new insured needs more time than one who's been in the program for several years, and becomes more of just a maintenance thing of, reporting a couple times through the years. But to get that first policy set up, it does take some time. So the sooner the better.
So it's not I walk into the insurance office tomorrow morning and I can leave with the policy in the afternoon.
Well, and in some cases it can be. If there's so many different situations and scenarios, and it even matters some by crop. So if you walked in to my office on March the 14th and said, "Hey, I'm going to grow corn," and I mean just regular field corn, for the first time in LaRue County. This is the first time I've ever grown it. I don't have any history. I'm not, I don't really have any experience. Then yes, I could write that policy in just a few minutes, designate you as a new producer of that crop in the particular county, and we get your basic name, address, phone number, social security number, those kind of things, and can write you a policy pretty quickly. But then from there, it gets more complicated. So for instance, if instead of writing your policy as Dakota Moore, we write the policy as Moore Farms. So then we have to have your federal ID number, and we have to have the individuals that make up that LLC or corporation or whatever that it may be, because the RMA requires, RMA is the risk management agency. So it's the branch of the Department of Agriculture that oversees crop insurance and sets the rules. So they require us to report any individuals that own at least 10% of an entity. So if it's Moore Farms and you've got yourself and 3 brothers that farm, then we have to have name, address, phone number, social security number for all of those individuals. And so that's a layer of information that we have to collect. And then if you say, you know what, I've been growing corn and soybeans for 6 years in LaRue County, then it will be to your advantage to have those production records for 6 years to be able to turn those in, to establish your history, and do all that. So it is possible to do it all in one day, but it's depending on how complicated the policy becomes. The other thing that we run into a lot with specialty crops is there aren't many specialty crop policies available in the state of Kentucky. For example, peaches is a crop that I deal with some, and there are only 3 counties in the state of Kentucky where peaches are insurable under the traditional multi-peril policy. Any counties beyond that, we have to do what's called a written agreement. And so that's a packet of documentation that we would put together that has at least 3 years of production history. It requires evidence of how that crop is sold. And so if it's retail sales, then that becomes more complicated, and having some kind of daily sales tally to reflect where those peaches went. You harvested 1,000 bushels of peaches, but then where did they go and how were they disposed of? Did you deliver to, a packet house where they sold to another retail outlet on a wholesale basis, or did you sell them retail through your own market? And so collecting all of that information becomes more of a burden. And then we have to actually submit that written agreement, that packet of information for the written agreement, to RMA for them to review and then either approve or deny the written agreement to actually attach coverage for that. And so all of that just takes time. And so that's why I would encourage anybody to get started sooner rather than later, especially on specialty crops, where we're in most cases either going to be looking at a written agreement, or you're going to be looking at doing the whole farm policy and all the requirements that come with that we'll talk about a little later.
So the growers need to be keeping pretty detailed records of what they're planting, how often they planted it, and then where they're selling as well. Is there any other records they need to be keeping to bring to the agent to help them with the policy?
It depends a little bit about on what crop we're talking about. So, for example, and I use the corn, soybeans, and tobacco option just because that's the crops that I deal with most on a daily basis. So let's say if it's a tobacco crop, then you would want to have your sales for the last 3 years, at least, if you have those, or at least know a total aggregate sales of that. Then we would also need to know how many acres of each crop were planted and where they were planted. The crop insurance, the traditional multi-peril crop insurance program is based on the farm serial number structure that exists within FSA. And so if you're growing on multiple farms and maybe it's a rotation of farm 1, farm 2, and farm 3, then you would need to know what was planted on each farm each year, and then the production history attaches to that particular farm. And so then your coverage is built on what the production was on an average of the years that that crop was actually planted on that particular farm. If you are operating strictly on one farm serial number, but maybe you're just moving that crop around. So for example, if you were growing watermelons, and you grew 2 acres of watermelons every year, but you're planting them in a different place on your farm, then I don't necessarily have to know which field they were planted in, but we do need to know within the confines of the farm serial number structure, where those were planted. If you have been reporting with FSA, then they have that documentation, and it's really easy to just request that they give you several years of their 578 producer print reports that shows how much of each crop you have planted. Excuse me. In a lot of cases, they just send that information. They can send that information directly to your agent. If you've not been reporting to FSA, then it becomes a matter of trying to recreate that from your own records and do that. If we get into the whole farm policy in terms of records, the most important thing that we'll need for that type policy is going to be your tax returns, because the bulk of the whole farm policy coverage is built off of your Schedule F on your tax returns. And so if you've been producing for a number of years, you're actually going to need 6 years worth of your Schedule F. The immediately past year, so let's say if we're talking about purchasing insurance for the 22 crop year, chances are you won't have your 21 crop year taxes complete and have all that settled. And so that becomes what we call the lag year. And so then we would need 5 years of history prior to that. So you'd need 2019, 18, 17, and 16 tax returns to bring in. And then there's also, so you need the tax returns, then you also will need that planted acres and production information that we talked about before, to build the base of that whole farm policy, because you have to establish you've been producing, how many acres of each crop that you've been producing, and what the production in terms of bushels or pounds or units per acre for each of those crops all becomes part of this modeling that happens with the whole farm policy to determine what your total coverage is. And you have to be able to match that up with your tax returns. And so if, say, for example, you're growing, you come in and say, I'm growing 20 acres of watermelons, and I've been grossing $10,000 an acre off those watermelons. So I sold $200,000 worth of watermelons last year. But we look at the Schedule F and there's only $20,000 worth of crop sales. Then we can't attach coverage to more than what's on your Schedule F. And so that becomes an issue. And I know that it becomes an issue sometimes with individuals that may be growing smaller amounts particularly, or maybe they're selling at a farmer's market and that's not being reported as income. Then it becomes difficult to write that whole farm policy for those, because that's the production records and those on this side have to match up with what's going on with the tax return. So when we get into whole farm policy, that tax returns become a very important part to go along with the production side too.
Sure. And about how many years should they keep? You said they need to bring about 6 years, or you look at for the tax returns. Do they need to keep
Right.
records for their whole production, however, decades, or is it just the past few years?
For the whole farm, if they've got that 6 years, then that becomes the bulk of what you need. For other crops that have if we talk about the more traditional multi-peril type policy, we will use a database that can have up to 10 entries in that database. And so what happens a lot, go back to the example of grain again. If a guy has a 50-acre farm and he plants corn this year and soybeans next year, we can use up to 10 years of corn history. And if he's only planting corn every other year, then we may have yields that are 20 years old, still part of that database and part of that history. So we have to use a farm average has to have 4 entries in it. If we have less than 4, then there's an assigned yield that we call the transitional yield that can be used. So for example, if you've only grown corn on this particular farm for 2 years, then you would have 2 years of your own history. Then we would have 2 years of the transitional yield. Or if you say, I've been growing, for 4 years, but I only have 2 years worth of records, then they'll assign the transitional yield to those other 2 years. And in most cases, it's to your benefit to have your own records, because the transitional yields will typically be lower than what you would expect your production to be. So in most cases, it'd be to your advantage to have at least 4 years of your actual production, and you can go back as many as 10. And like I said, sometimes that gets you some yields that are 20 years old in a rotation kind of situation.
So are these records something that they should bring with them at their first meeting with an agent, or do growers need to wait and see what the agent's going to need from them?
No, if they've got those records, then I think it's it's always better to kind of see where we are to start with, and as much of that as you can bring to an initial meeting, I think it saves work later on. And then in my situation as an agent, I can take all that information and say, okay, here's where we're starting, and here's the holes. Maybe I'm missing this year, or just being able to look at kind of that whole picture of what's going on, and be able to figure out what other pieces we do need would be helpful. So I think anything like that you have that you can bring along for that initial meeting would be helpful.
Sure. And I've got one last question. Are there anything or any facts that you wish people knew about crop insurance beforehand, or do you want them to do some research on their own, or do you just want them to come in and say, I need help, and then you point them in the direction?
I think some of what we've covered in terms of the record keeping and documentation, because that's the part that really falls on the producer. And some of that reporting can come from FSA, assuming that they have been reporting to FSA in the past. One thing that I think gets overlooked is the subsidy that exists. We as producers have the opportunity for USDA to subsidize the premiums pretty significantly in an effort to keep those more affordable and incentivize producers to participate in the program. because ultimately that leads to fewer producers who need these ad hoc disaster programs when they happen. If crops are covered and your indemnities cover your losses, then we don't have these disasters. And if you think about your income as this graph that ebbs and flows as yields go up and prices go up, and you're going to take a little off the top of those really good years in terms of premium, but then you're going to fill up those valleys where your production is lower, and be able to stabilize that income. I think that's, in general, the big picture of insurance, and having that subsidy in a lot of cases is paying at least half of the actual premium, what it would be. The crop insurance is rated like any other insurance, and the actuarials determine what the rate should be for in the counties where it's insured. So for example, peaches in Warren County, Kentucky has a rate that for this many dollars of insurance, it should cost this much premium, and then the subsidy comes on and pays a portion of that. So that's a big advantage for us as producers that I think we should be taking advantage of, because it's a big help.
That's great. We thank you for all the information you've given us, especially on
one
the
more
records we need to be keeping. Go ahead.
Yeah, one more thing real quick on the just a general information. It is a little different than like you think about auto or home, where you're rated differently depending on your maybe your accident history and so forth. Your rates will change somewhat depending on your production. But if you and I are growing the same crop in the same county and had exactly the same production, then we would pay the same price for that. So it's not necessarily rated on number of claims and that kind of thing like an auto policy would be, except that it does impact your production history and may affect the amount of coverage that you're able to get. But just in terms of he had a loss and so his premium's going to go up, that's not the case.
I've got a question from the chat. Do you have to use an agent from your county, or can you use one from somewhere else? A different county, a different state?
No, you can use anyone that's licensed in the state. Can write, for example, in Kentucky, you can write in any county in Kentucky. You do have to be licensed for that particular state. So, for example, our agency is licensed to write in Kentucky, Tennessee, and Indiana. And I have had license in Illinois and Virginia, but don't have any policies in either of those states now. But each state has a Department of Insurance that oversees the licensing, and so we have to get what's called non-resident license if I want to write business in another state. But anyone that's licensed to write crop insurance in the state of Kentucky can write in any county. So no, it's not restricted to just counties.
And we've got one more. Do you need to keep different records if you're selling wholesale or direct to consumer?
The direct to consumer records are a little more difficult to keep, just because becomes more involved. There's more transactions. For the most part, if you have a good register system, or you have a good record of how those crops were sold, and it could be as simple as say for farmers market, you have a beginning inventory. These are all the things that I loaded on the truck today when I went to farmers market, and this is what I brought home, or I sold out of everything that I had today. These are the total dollars that I sold, and, keeping a record of what you sold, what value you sold your tomatoes for versus your cucumbers or your watermelons, and just having that record. If you've got a storefront with a register system, you can do it that way, or especially if you have a point of sale system, then that helps a lot with really narrowing down and keeping those records, and makes it a lot easier to say, okay, here's the number of dollars of tomatoes that went through our retail market. The wholesale markets are a little easier just because, you're going to have some kind of invoice that you created, or a delivery ticket or something like that, that can then be verified by a third party. And it's fewer transactions. Maybe you're taking 6 bins of watermelons to, and it could even be the produce auction. And then here's these 6 bins and what they sold for, versus I sold that, that 250 watermelons I sold out to 250 different people in, all those different transactions. So, it's essentially the same records, in that you want a record of where all that produce went, regardless of whether it was sale or retail. It just becomes a little more complicated to develop and produce those records if it's direct to consumer.
Sure. I think that's it on our questions. I just want to remind everyone that we will be posting this on YouTube and Facebook, so you can go back and watch our webinar, and we'll have our next one on November 9th. And we'll also be posting a couple recorded videos this month. We do have one that the Farm Service Agency is going to be doing on their crop reporting, specifically to participate in their programs. And if there's not any other questions, I think that's it. It's about 12 o'clock here in Central Kentucky, and about 1 in Eastern. So I think it's been a great webinar, and we want to thank Jeremy again for speaking with us.
Thank you for having me. Yeah, appreciate the opportunity.